Joining me now with more is Jim Warden. He's a Chief Investment Officer at the Wealth Consulting Group. Jim, great to have you joining us this morning. It is early on the West Coast. I see you're joining from California. What has you energetic about markets in 2026?
Thanks, Kristen. Great to be with you, and Happy New Year. We were very bullish this year. If you asked me a few months ago, I was not as bullish, but I feel like a few things have lined up. The stars have aligned in the sense, and that the capital expenditures are real. You had some folks on talking about CES and what was going on there. This is all real. We're seeing a lot of growth, a lot of margin expansion, revenue growth, all positives. But we also believe that because this is a little bit of a K-shaped economy, the Fed needs to take care of those people that are struggling. And so being in this environment with the Fed cutting rates to help out those in need, this is going to be very good for the equity markets.
Interesting. Of course, we do anticipate one rate cut, that is, in 2026. What does that say about the state of the economy? We see equities rising this morning. We see yields up as well.
Yeah, it's a very strange environment, Kristen. So we look at a lot of different measures. We look at cash levels, which are very, very high. Typically, when you see cash levels high and consumer sentiment, by the way, has been very low, that's usually a great setup for money to come in, for people to get more optimistic. But at the same time, we're seeing that the Fed is easing, and we're seeing the market is not far from all-time highs. We actually think the Fed's probably going to cut 2 to 3 times, maybe more. We don't want them. We don't want this to be a situation where unemployment increases too high and financial conditions are just too tight. So we believe that this is a Goldilocks situation. We're hoping that that's what it is. But if the Fed does get a little bit too hawkish, then we would be concerned there.
Yeah. Look, the S&P 500 gaining 16% in 2025. Its third straight year of double-digit gains after that bottom in October of 2022. Was it just profit taking that we saw at the end of 2025? We saw a little bit of weakness, Jim, there, but still overall a banner year for equities.
Yeah, that's right. And so we have a lot of clients that are looking at the tax situation. You have portfolio managers that are looking to kind of clean up their portfolio, maybe take a little bit off the table, but that's just normal rebalancing we see. And, we see that, today is probably going to, set the tone for hopefully a good January. And, we can see that more people have gotten bullish. Now that's probably my one concern, is if everyone becomes too bullish, then that would be kind of a setup for a FOMO trade. And, the market could reach our target, but we could go beyond that, and then we could have a melt up and a meltdown. That would be one concern this year.
Interesting. Okay, so what is going to spur some of this volatility? Is it that we are making our way through this cycle? Is it the midterm elections, more policy? What do our viewers need to know?
Yeah, that's a great question. So we believe there's multiple things going on here. It's a Fed that could become more hawkish. We're still looking at inflation. We don't think inflation is a big problem here. It looks like this appears to be in a downtrend, but should we see that turns around and is higher, then that becomes a problem. I think viewers also need to, they have to look at the fundamentals. They have to look at risk. There is some froth. There are pockets of froth, we believe, in the markets, and we think that just comes down to good risk management and diversification, and making sure that that companies have good fundamentals. But we're also looking at things like momentum and trend too. So when we combine those things, we combine that with quality, we think that that's a pretty good outcome for investors.
Jim Warden, CIO at the Wealth Consulting Group. Jim, thank you for getting up early with us over there on the West Coast, of course, on this first trading session of 2026. Happy New Year.
Thank you.